Welcome to the SubTo Real Estate Podcast. Ever wonder how people get into real estate without huge savings or a perfect credit score? You're not alone, and today we're pulling back the curtain on one of the most powerful yet often overlooked strategies in real estate: subject to investing. This method has helped thousands take control of properties without traditional bank financing, and in this show, we'll break it all down for you. Let's get started. Chapter 1. What is subject to and how does it work? Imagine this. A seller is offering a house for $200,000. There's still $150,000 left on their mortgage. Instead of applying for a new loan, you agree to take over their mortgage payments, and they transfer ownership to you. That's the core of a subject to deal. The loan stays in the seller's name, but the property becomes yours. Here's who's involved. The seller transfers ownership but keeps the mortgage in their name. You, the buyer, take ownership and responsibility for payments. A title company handles the legal work to make sure everything's clean and official. Why use subject to? It's faster than traditional financing. You avoid the hassle of bank approvals. And you can start building your real estate portfolio right now, even if your credit's not perfect. Chapter 2. How to find the right property. Where do you start looking? Great deals aren't always listed on the front page. Use platforms like Zillow, Realtor.com, and Facebook Marketplace. Look for keywords like motivated seller or assumable mortgage. Work with local agents and deal hunters, people who are always on the lookout for off-market opportunities. Sometimes the best deals never make it online. Found a deal? Here's what to check. Title check. Make sure there are no liens, debts, or restrictions. PT analysis. That's principal, interest, taxes, and insurance. Compare total monthly cost to the rental income you could earn, documents you'll need, power of attorney, purchase agreement, and always work with a title company. That's your legal safety net. Chapter 3. The financial side. Let's talk numbers. How much do you need to start? Usually just enough to cover late payments, administrative fees, and maybe a small upfront payment to the seller. Example, the seller is behind $3,000 on the mortgage. That's all you need to pay to take over. No big loans, no 20% down payments, just smart structuring. If you don't have the cash, partner with investors, offer them a percentage of profits or a fixed return. Want to know if a deal is profitable? Rental income $1,500. PT, $1,000. Net cash flow, $500 per month. Annual profit, $6,000. If you invested $10,000, that's a 60% return. Not bad. To attract investors, show past results, offer risk mitigation strategies, be transparent about returns. Also, always keep an emergency fund for repairs, vacancies, surprises. Chapter 4. Risks and how to reduce them. Subject to isn't risk-free. One of the biggest issues, the due on sale clause. This allows the bank to call the loan due if the property changes hands. What to do? Always stay current on payments. Consider using a trust to take title discreetly. Check for HOA restrictions before you buy. Some associations limit rentals or require approval for ownership changes. Always inspect the property thoroughly and have a reserve fund ready. Partner with lawyers to verify contracts, title companies to ensure clean transfers and have an exit strategy. If something doesn't go as planned, be ready to sell or pivot. Chapter 5. The step-by-step process. 1. Find a deal. Use listing sites, network with agents and wholesalers, and filter for properties with active mortgages. 2. Run the numbers, calculate monthly costs, potential rent, and expected cash flow. 3. Negotiate, explain the benefits to the seller, fast close, relief from payments, minimal hassle. 4. Close the deal. Hire a title company, get legal documents signed, and register the deal. 5. Manage the property setup, rent collection, automate mortgage payments, and maintain the home. Chapter 6. Scaling up. Once you've closed your first deal, it's time to think bigger. Reinvest your cash flow into new properties. Expand to new markets. Use investor capital to move faster. Diversify your portfolio with different property types and locations. Improve your properties. New kitchens, new roofs to boost value and rent. Build your team, agents, lawyers, contractors. That's your power base. Final thoughts. Subject. To investing opens doors. Real estate is no longer just for the wealthy or the well-connected. With knowledge and action, you can build your portfolio one deal at a time. Start small, learn fast, scale smart. Thanks for listening to the SubTo Real Estate Podcast.